Good morning, everybody. This is Gary Fult doing the weekly S&P wrap-up for the week ending January 29th. Today's January 31st. Very interesting week as we go through the markets and we see things that are very, maybe change of behavior like in the market. Next week I think will be a telling week for the markets. But one of the things that we know about Wyckoff and reading of the tape is the effort versus results and the ease of movement to the markets. Sometimes schematically are not perfect, but the reading of the tape, the energy or the volume versus price, these swings that Wyckoff talks about so much are eloquently displayed in this particular chart today and this week. We have a market that is obviously in some type of uptrend. This market is up. And last week, we closed right here. Many people use that as a pivot area. Right here is a pivot area to the market. And that is something which we have to respect because above that area, the weekly people are long, are making money. Under that area, they're short. Money is a driver to decisions. As we go on to Sunday night into Monday, we see the spring potential of the market. We take this reactionary low, we draw this across, and voila, we have a spring beautifully occurred at the 38.13 level of the market. Gets under here, and the market then springs. This is what we consider a spring of the market. Move under the low and back above it. And a fairly strong close. And the volume increases the market in a very strong position. The next day, we try to go up. We have a cluster close. The close is very similar. And the volume at this point dries up. That in itself is not necessarily a bearish sign because we don't have supply coming to the market. But anytime we barely make a new high, anytime the market is at the resistance area or retest area, we always have to be very conscientious of the particular moves or action right after that. We know under the previous day's low, if people are long in this market, people tend to put stops underneath previous lows. Well, we have two of them, so we assume that the market has stopped under this level. The market then comes back down, and all of a sudden we see an increase in volume to the market. So all the people that were long in this area that did not get stopped out because of putting stops under here on the spring position, those of you that did not get out here liquidated the positions here. How do we know that? By the increase of volume to the market. So all the stops that were not stopped out here got washed out here. Our decision has to be, is the market supply to mark down, or is it some type of shakeout, a one-day event that would cause the market to go higher? Well, we don't know, but we'll see the quality of the rally back up. The rally on Thursday allowed us to rally into the resistance area, as we could see, into the resistance area, or a retest of an area that was support and now resistance. The high here was actually 38.23. The low here was 38.21. A perfect retest of a support that now becomes resistance. The close was well off the high, indicating selling with less volume and less range. On Friday, we see the market increasing volume a tad and the range being a tad smaller. So we can look at that as two ways. One, the beginning of markdown. Two, we look at this as a shortening of the downward thrust, where the market makes lower lows, but grinds lower at those areas. So this possibly could be a shortening of the downward thrust. If that's the case, we can expect the market to bounce back into the range again, where the market played most of last week. If we get long liquidation, our next area to look for a market would be down to this area here, would be the 35.96 area. But before that, we'll have to deal with this area here at the 36.52 area. By the way, these two areas are very important support areas for two reasons. One, they react from here. You see a reaction up, but also they show up on the daily chart, the weekly chart, and the monthly chart. So all three time frames, when you have the market that coincide with each other, when all three coincide with each other, that gives it one more piece of the puzzle that in your favor to understand what happens to the market. We can also see that if we look at the market aspect here, where we get the reverse trend line and across from here, this will form our access line to the market. But more importantly, what's important is to see how the market acts in this area over the next week or so. Is this a shortening of downward thrust, or is this the beginning of long liquidations to the markets? Since this bar is a wider bar, it's probably more significant, but this is a bar that's important too, because it's the first reaction that the market reacted from. So we'll see next week. Be careful. We could see a lot of volatile trading, and a lot of news items and things of that nature. So I want to thank you for listening to this video, and we'll see you during the week. Please join us in our Discord room, our Wyckoff Discord room. And I hope you liked this video, and we'll see you next week with the next week of wrap-up. Everybody have a good, safe trading week. Thank you, everybody. Bye for now.